Hello everybody, it's Yashar here, back again with another video, and in this video I will revisit Aritzia stock. I will discuss the recent earnings report which released yesterday and update my valuation of Aritzia stock from the last year with the new financial data we received in the last 4 quarters. I previously reviewed Aritzia stock in detail, so if you want to familiarize yourself with their business model, watch my video on Aritzia, which I will leave a link to that video in the description box below. To give you some context, Aritzia is largest holding in our stock portfolio. Today we have over $10,000 invested in this company, and it actually was the best performing stock for me in the last year, and it is up 23% since we basically own the stock. In fact, in the last year, Aritzia is up 8.27%, while S&P 500 as the average return of top 500 company in the US is down 17.29%. In longer time periods, Aritzia totally smoked the S&P 500. In the last 5 years, Aritzia is up 343%, while S&P 500 is only up 42%. This is not a random performance, and I didn't pick Aritzia as our largest holding randomly because I like, for example, the name of the company. No, Aritzia is actually growing extremely fast and posted amazing numbers quarter after quarter. Just look at their growth and profitability metrics. They increased their revenue by 100% in the last 3 years. Their average return on equity and invested capital in the last 5 years was 2.3% and 13.43% respectively, which were great numbers, but in the last 12 months, they were 38% and 19%. This is crazy high and demonstrates the quality of their business. The return on invested capital, something like 19%, this is great for a business. For those who are not familiar with this company, Aritzia is a Canadian fashion company which design, produce and sell clothing and accessories mainly for women. And they are super popular between teenagers, young girls, students and even business women. In fact, I looked at the Aritzia related videos on YouTube and then Aritzia subreddit and in the past couple of minutes, and the excitement about their products is through the roof, even during these recessionary periods. This is a company that has brand recognition. This is a company that knows their customers pretty well and was able to connect with their customers and make them loyal fans and supporters of the brand. The company currently operates over 112 boutiques in US and Canada, and they're growing at a rapid pace, particularly in United States by opening almost 8 new boutiques per year, while they're also growing their e-commerce business rapidly. They sell pretty much everything related to women clothing and accessories, including sweatshirts, leggings, pants, dresses, jackets, sport bras, hats, bags, and shoes. So for the next part of this video, I will look at the recent earnings report of the company, which was released yesterday on October 12, where everybody concerned about consumer spending on semi-luxury items like Aritzia clothing products. Aritzia numbers once again demonstrate that you should not underestimate the brand quality of Aritzia and the power of its customers, or I should say supporters, which are mostly teenagers and young women. They released super stellar numbers during this recession with 50% increase in their revenue, 16% increase in their net income, and 13% increase in their EBITDA. The CEO of the company, Jennifer Wong, explained the overall financial results of the company. She said, "Our exceptional sales momentum extended through the second quarter of fiscal 2023, delivering net revenue growth of 50%. Better than anticipated results were driven by outstanding client response to our beautiful product assortment, as our everyday luxury experience continues to resonate across all geographies and all channels." So she added, "Our performance in United States continued to surge with revenue growth of 80%, as our existing and new boutiques once again outperformed expectations, underscoring our growing brand awareness." And then she mentioned our e-commerce business in United States and Canada grew at 33%, further fueling our multi-channel business models. She continued, "Our strong performance has continued through the start of the third quarter with robust client demand across all products categories. Looking forward, we believe that we will remain well positioned for the long-term success as we strategically invest in infrastructure that will allow us to capitalize on our growth strategies." So this earnings report was amazing, but it has also 2 points which are important to discuss here, as I personally didn't like to see them in this report. So the first point, gross profit margin was 41.9% compared to 44.6% in the last quarter, basically. In the statement, they mentioned the 217 basis point decrease in gross profit margin was primarily driven by discontinued COVID relief subsidies and higher freight costs and distribution center costs, which is understandable. So I don't like this to see the gross profit margin goes down, but I can understand that. The second point is my main issue, inventory level. So Aritzia's inventory at the end of basically this quarter, this year, was $455 million, an increase of 150% compared to $181 million at the end of the same quarter in last year. They mentioned inventory was booked earlier in order to mitigate the risk of supply chain disruptions, and they say that the company is comfortable with its inventory position to meet client demand and for the season. Expect basically normal markdown to be no greater than pre-pandemic levels. So they basically increased their inventory by a lot, by a whopping 150%. This is a gamble by management as they increase the inventory in the hope that the customers continue to buy all this inventory in the coming seasons. And to be honest, it's not a great bet in my opinion. I don't like this idea, and in worst case scenario, it will further reduce profit margins by a few additional basis points. So other than these 2 points which I didn't like in this report, it was an amazing report, right? So the outlook of Aritzia was also great for the next year. They expect net revenue to be in the range of 2 billion to 2.05 billion, representing an increase of approximately 34 to 37% from last year, basically up from the previous outlook that they provided. They expect to open 8 new boutiques in US and 5 new boutiques expansions in Canada and US. They also expect to continue to invest in distribution centers and their e-commerce platform, which is capital intensive in the short term, but that can be very rewarding in the long term. Overall, this report was once again great, and I'm happy to be a shareholder of Aritzia. With this new information in mind, let's revisit Aritzia valuations and update my last year discounted cash flow model. Here I first show my valuations of Aritzia stock from last year, which was based on free cash flow of the company. I assume the company will grow by 10% in the short term for the bear case and 30% in the short term for the bull case. And based on that, the fair value of Aritzia was around $48. Let's put the new numbers for earnings into the model and see if we should change the growth rates and reevaluate Aritzia stock today. This time, instead of free cash flow, let's evaluate Aritzia using earnings per share. So this time I use discounted future earnings model, which basically estimates the value of stocks based on projections for their future earnings. So I make some assumptions about the growth of the company in the next 10 years and then discount the future earnings into the present value of the stock based on my expected rate of return. So I start with the past 4th quarter diluted earnings per share of the company, and based on 3 different scenarios, I predict the future earnings per share of the company in the next 10 years. In the bear case, or the most negative case for the stock, the company can grow by 10% in the short term, and then the growth will drop to 8% in the long term. I consider the terminal multiple of price to earnings of 10 for this case, which is consistent with historical bear periods for this type of businesses. This is the case that Aritzia fails significantly in coming quarters, and as it is not a probable outcome, I give this scenario a 25% chance. For normal case, I consider a little bit better growth and a terminal multiple of 20, which is historical average multiple for a growing fashion business. I assigned a 50% chance to this scenario. So for the bull case, or the best possible outcome, I consider the business grow by 30% in the short term, and then it drops to 20% in the long term. And I consider the terminal multiple of 30, which is a bull multiple for fashion industry in the long term. Right now, Aritzia has almost the same PE ratio, but this is almost what management of the Aritzia predicts for the future expansion of Aritzia. So I only assign 25% chance to this scenario, as it is an ideal growth model for the company. For riskier growth stocks, I usually expect 15% return, and for dividend stable stocks, I expect 10% return. This is important. For most companies, I put 10% as my expected rate of return, but for Aritzia, as it is riskier than a company like TD Bank or Google, and their future earnings are more uncertain, I put 15% here so I can have a margin of safety. If I expect a 15% return year over year from this stock, the fair value of the company is $49.5, which means compared to current share price almost $51, the shares are traded at close to its fair value today. It means if you expect 15% return on your money year over year, this stock is probably going to deliver that 15% return in the next 10 years. The results, as expected, are not much different from last year's valuation, which estimated the fair value to be around $48. While I believe Aritzia is not undervalued today based on this model, I think it is a high quality business at a fair value, and therefore I think it is still traded at a relatively reasonable and attractive valuations. There you are, guys. I hope you enjoyed the video, and if you enjoyed the video, consider subscribing to the channel to see similar videos. Thank you for watching, and I hope to see you guys in the next video. Farewell.